Before you place your next trade, pause for a second and listen to this, because what I'm about to show you could be the difference between growing your account or blowing it. Most traders don't actually lose because their strategy is bad, right? They lose because of what they don't do before they enter a trade. No preparation, no structure, just vibe and emotions. And the market punishes that every single time. Now, imagine taking, right, a trade that looks perfect, clean setup, strong signal, then suddenly the market turns against you completely, not because you were unlucky, but because you skipped a simple step that professional traders never ignored. And in this video, stick to it to the very end, right? You are going to learn the exact checklist you must go through before placing any trade. The same habit that separates disciplined traders from those who keep funding the market. So subscribe, turn on the notification bell, smash the like button, join my Telegram community. If you want one-on-one mentorship, the link is at the description. So if you start applying this, right, you won't just trade more, you will trade smarter and like a professional. Number one, check the higher time frame before getting into any trade. Now, before you think about entering a trade, zoom out. This is where most beginners get it wrong. They are too focused on the 1 minute to 5 minute time frame or even to 15-minute time frame, chasing small moves, while completely ignoring what the market is doing on the higher or the bigger time frame. The market moves in structure. What you see as a buy opportunity on lower time frame could actually just be a small pullback on a higher time frame, and that is how traders get trapped. Start with daily or 4-hour charts. Ask yourself these questions, right? Is the market trending up or trending down, or ranging? Are we making higher highs or higher lows, or the opposite? This gives you direction. Think of it like driving. In the higher time frame is your map, while the lower time frame is just your steering wheel. Without the map, you are just moving but don't know where you are going. When you align your trade with the higher time frame, your probability instantly improves. Am I understood? You stop fighting the market and start flowing with it, and that alone can separate you from 80% of struggling traders. Smash the like button. Number two, identify key levels like your support, your resistance. The market respect levels, very important than anything else. Price react at zones where buyers and sellers previously made strong decisions. If you ignore these areas, right, you are basically trading blindly. Now, before placing that trade or before placing any trade, mark out your key support and resistance level. These are the zones where price has revised, consolidate, or reacted strongly in the past. And why? Because institutions leave footprint there. A lot of traders enter trade in the middle of nowhere, no structure, no levels, no confirmation, then boom, wonder why the price suddenly revises against them. It's reacting to a level they didn't pay attention to. When price approaches a key level, that is where you start looking for opportunities, not before. Let the market come to you naturally. Patience here is everything. Now, understand that levels are zones, not exact line. The market is not that precise. Give price some room to breathe. Trading without marking the levels is like playing football, right, without goalposts. You are just active, but you are not actually aiming at anything meaningful. And that takes us to number three, wait for confirmation, right? Stop predicting. Now, one of the fastest way to lose money in trading is trying to predict what the market will do next. Truth is, nobody knows, not even the best traders in the world. Instead of predicting, learn to react. After identifying your level, wait for confirmation. This could be candlestick patterns, a break and retest, rejection wicks, or shift in market structure. Whatever your strategy is, let it show up before you enter. Smash the like button. Now, most traders enter too early because of fear of missing out, and this has sent a lot of people home. They see price approaching a level and jump in immediately, hoping it will react. But hope is not a strategy. Confirmation is your filter. It protects you from unnecessary losses and increases your confidence in trade. Now think of it like this. You don't marry someone just because they look good, right? You wait, observe, and confirm their character. Now trading works the same way. When you wait for confirmation, you might miss some trades, like you might miss some babes, right? But the ones you take will be much higher quality. And in trading, quality always beats quantity. And that takes us to number 4. Calculate your risk before entering. Before entering any trade, you must already know how much you are willing to lose. Not after you enter, not when the trade starts going against you. Am I understood? Now, this is where discipline separates professionals, right, from gamblers. Decide your risk per trade, whether it's going to be 1%, 2%, or even less. Don't risk higher than these numbers. Then calculate your lot size based on your stop loss distance. Now, this ensures that no single trade can wipe out your account. Many traders focus only on how much they can make, but ignore how much they can lose. That mindset is dangerous. Now, in trading, protecting your capital is more important than profit. Now, because if you lose your capital, you are out of the game. Also, always use a stop loss. No excuse. No matter how far or how good you are, the market can move unpredictably, and without a stop loss, one bad trade can destroy weeks or months of progress. Think long term. Trading is not about one trade, it's about consistency over time. When your risk is controlled, your emotions become stable, and when your emotions are stable, your decisions improve. And that takes us to number 5. Check the news. Always avoid unexpected volatility. Now, you can have the perfect setup, clean structure, strong level, right, solid confirmation, and still lose a trade because of one thing: news. Now, economic news can move the market aggressively within seconds, and if you are not aware of it, you can get caught on the wrong side of a sudden spike. Now, before placing any trade, always check the economic calendar. Look out for higher impact news like interest rate decision, inflation reports, and employment data. Now, during these times, right, the market becomes unpredictable, spread widen, slippage increases, and technical analysis becomes less reliable. Now, if you're a beginner, right, it's often better to stay out during major news events. There will always be another opportunity. Professional traders, right, who respect news, they don't ignore it. Never. Now, trading without checking the news is like sailing without checking the weather forecast. You might be fine until the storm hits. Stay informed. It doesn't take more than a few minutes, but it can save you from unnecessary losses. Number 6, have clear trading plan. At this point, no emotion is allowed. Now, before you click that buy or sell button, ask yourself, do I actually have a plan for this trade? A proper trading plan includes your entry, stop loss, take profit, and the reason for taking the trade. If you don't have this clearly defined, you are just gambling. Now, emotions are the biggest enemy in trading. Fear, greed, impatience, they can all destroy your accounts if you don't have structure. Your plan is what keeps you grounded. Now, when the trade is running, right, you don't panic. When it's in drawdown, you don't make impulsive decisions. You simply follow your plan. Most traders lose not because their strategy is bad, right? It's because they don't stick to it. Consistency is built through discipline, not luck. Now, treat trading like a business, not a game. Every trade should be calculated, intentional, and aligned with your strategy, because at the end of the day, it's not about how many trades you take, it's about how well you execute the ones that matter. Now, if you find value in the video, don't forget to subscribe, turn on the notification bell. And if you found this helpful again, don't forget to drop a comment below. Trade with a plan. Let me know if you are serious about improving your trading. Join my Telegram community. If you want one-on-one mentorship, the link is at the description.